What's up, crypto fam? Welcome back to the Crypto Breakdown Kadena Whiteboard mini-series. In the first part of this video, we're going to talk about demand, aka what makes the price of a crypto asset go up and what makes the price of a crypto asset go down. Then in part 2, we're going to talk about why layer 1 blockchains are the holy grail of investing opportunities. Legit. I'm going to blow your mind when I show you how much demand Open Sea created for Ethereum. Let's just say Kadena's market cap today is $300 million. In less than a 24-hour period, one NFT collection did a land sale and raised more than $320 million worth of Ethereum. Pretty crazy to think about, right? So let's start with demand. When we are talking about a layer 1 blockchain and why I'm so bullish on Kadena is because we know that for a fact there is going to be massive demand for the KDA token in the near future. Well, how do we know that? Because we've watched it play out in every single big layer 1 ecosystem. Let me show you what I mean. If we take a look at TradingView on January 1st of 2021, we can see that the price of Solana was $1.69 and that at the time, there were 0 dApps built on the Solana blockchain. Fast forward 50 days on February 21st of 2021, there were around 21 dApps that were built on top of the Solana blockchain, and the price of Solana was $9.98. March 23rd of 2021, 25 dApps, $14.45. April 14th of 2021, 65 dApps, $27.37. May 15th of 2021, 75 dApps, $47.57. Now this next date is the most important. In my opinion, on July 20th of 2021, we were in the worst part of the bear market summer slump, and take a look at the price of Solana, $22.26. At that point, the Solana blockchain had over 130 dApps built on top of their blockchain. Even in the worst part of the bear market, Solana was still up 1,321% from its previous cycle low. That's pretty freaking crazy, and I'll explain exactly why that happened right after this. On August 17th of 2021, Solana had 249 dApps launched on their ecosystem. Price was $52.25. October 3rd of 2021, 300 dApps, $169, and by November 17th of 2021, the price of Solana had peaked at $258, and the blockchain claimed that they had over 500 dApps built and running on top of the Solana blockchain. I mean, talk about onboarding and adoption. Solana absolutely dominated. So you can see by these figures and the price of Solana, there is definitely an overwhelming correlation between the amount of dApps built on a blockchain versus the price of the Solana token. So once I get the chance to explain why, you're really going to understand why I say that this part is mission critical for Kadena. You see, every time a new dApp launches on top of a layer 1 blockchain, that dApp has to settle every transaction in that ecosystem's currency. Mana is an ERC20 altcoin. Every time you send an ERC20 token, you have to pay Ethereum gas fees. When Decentraland launched on Ethereum, if you wanted to buy NFTs in their metaverse, guess what? You were paying Ethereum gas fees. Not only do the dApps being built on top of Ethereum use ETH gas fees, but the projects normally raise the funds in that same currency. When Decentraland launched and they did their ICO, they raised $240 million worth of Ethereum, and the only currency that you could buy into Decentraland's ICO was with Ethereum. And that was the industry standard until Ethereum gas fees went through the roof, and then it got kind of hard for somebody to buy $200 worth of mana when they had to pay $50 in ETH gas fees. But you guys get the idea. Now let's talk about Binance. According to CoinDesk, crypto exchange Binance just hired former Brazilian central bank president as an advisor. Not even 24 hours after this announcement, Binance also announces that it will be giving USDC the boot off their exchange. Yes, you heard that right. Binance, the world's largest crypto exchange, said on Monday it's introducing BUSD auto conversion, which will be used to convert any existing user balances and new deposits of USD coin, USDC, Pax Dollar, USDT, USDP, and True USD, TUSD into its own stablecoin, BUSD. The move is intended to enhance liquidity and capital efficiency for users, the company said in a statement. Binance said it will remove and cease any trading on spot pairs that include USDC, USDP, and TUSD. It will start the conversion on September 29. USDC, which is principally operated by Circle Internet Financial, is the second largest stablecoin, which has a market cap of nearly $51.9 billion. Binance's stablecoin BUSD is valued at about $19.4 billion, according to the crypto data provider CoinGecko. You see, what do central banks and stablecoins all have in common? Without demand or use case, they have no value. This is such a boss move by Binance. I mean, in my opinion, USDC is a central bank digital currency. It's the only stablecoin that has the support of the United States government. It is supposedly backed one-for-one with US dollars. Every time somebody buys into USDC with US dollars, those dollars are taken out of circulation and locked into a vault. At least that's what they tell us anyways. So, by Binance allowing assets like USDC to be traded on their exchange, they are inadvertently strengthening the US dollar by creating more demand for USDC. On June 6th of 2022, the United States Securities and Exchange Commission launched a probe into Binance, and they are currently investigating whether Binance Holding Ltd breached security laws when it conducted its initial coin offering, aka its ICO, of the BNB token 5 years ago. So fast forward 90 days later, and what happens? Binance told USDC to kick rocks, and in my opinion, this could be the beginning of the end for USDC. And that is exactly how inflation works. Let me explain. Let me explain what that means for anybody that doesn't understand the laws of supply and demand. So let's start off by talking about inflation. Now, it doesn't matter where you live at in the world, inflation is destroying countries on a global scale. But what is causing inflation to get so bad all of a sudden? And why is it just now becoming such an issue? Well, number one is the obvious. They printed way too much money. No questions asked. But how has the United States printed $15 trillion more than any other country, and the United States is still not in hyperinflation when other countries are? That is simple. Demand. So let me explain. I'm sure you've heard the news of people talking about China, Russia, and India trying to get away from the dollar standard. They hate that the dollar is the global reserve currency. This is very true. Why do they want to get off the dollar standard? Because they want to weaken the dollar. So let's take energy, for example. Turkey imports 100% of their energy. That means that when Turkey needs oil, they need to import it from another country. Because the US dollar is the global reserve currency, and outside of Russia, the only way you can purchase oil is with dollars, Turkey has no choice but to print more lira. They have to print more lira, and then they have to convert it to dollars. So because there is no demand for the Turkish lira is always going to be less valuable than the dollar. So they're going to pay that extra tax to convert it, and then they have to pay in dollars. You see, they are printing more of their own currency, and they are spending that in their own country, but outside of their country, there is no demand for their currency. And this is exactly why you saw India last month announce that they will no longer be accepting dollars in exchange for dairy products. The only way you can buy dairy is with the Indian rupee. And this one move right here might just save India from going into hyperinflation. What they've done is they've now created a demand for rupees outside of India. And what does that do? It strengthens the Indian rupee. Russia just did the same thing with oil. They no longer accept dollars. If you want oil from Russia, you have no choice but to pay for it with the Russian ruble. You see, we want Kadena to be the global reserve crypto that every other ecosystem accepts. Now let's talk about the Ethereum ecosystem. I'm sure you all remember of the legendary meme coin called Shiba. When Shiba first launched, they did an IDL. So an initial DEX launch. There was no IDO or ICO. They just put liquidity on a DEX and allowed people to swap the asset. What that means is that the only way that you could have bought Shiba was by buying Ethereum, sending it to your MetaMask, logging into Uniswap's website, and swapping ETH for Shiba. You see, anytime a project builds on top of a layer 1 blockchain, it creates more demand for that underlying asset of the blockchain. Think about that. Just imagine how much demand came from the projects that launched on Ethereum and did their ICOs and only accepted Ethereum. From January 1st of 2018 to today, 4,073 dApps have launched on top of the Ethereum blockchain. So just imagine if each project only raised $1 million in Ethereum. That would total over $4 billion. June 25th of 2017, EOS raised $196 million in their ICO just in Ethereum. September 7th of 2017, Filecoin raised $257 million worth of Ethereum. Aave, $17,860,000 worth of Ethereum. Decentraland, $24,140,000 worth of Ethereum. And the list goes on and on. If we take a look at the bottom right hand corner of the screen here, you can see that the only currency that was accepted was Ethereum. The only downfall or reason that changed was the cost of Ethereum gas fees. By 2019, crypto kitties were exploding and the Ethereum gas fees were upwards of $10 to $20 per transaction. And by 2020, Ethereum gas fees on average were about $25 to $50. So it's not surprising why projects like Matic started to do their ICOs and accept BNB, because gas fees for BNB are so much cheaper and the blockchains are pretty much integrated one for one with Ethereum. Anything you do on Binance, any tokens, you can pretty much all hold them in the same wallet. But by now, I'm sure you're starting to see how and why layer 1 blockchains explode like they do. Ethereum was the most advanced blockchain when it exploded. Over the course of a 605-day period, price of Ethereum skyrocketed from $140 to $4,950. That's pretty crazy, right? Binance went from $20 to $690 in 510 days, and Binance claims that they have 3,080 dApps built on top of their blockchain. Solana went from $1.50 to $260 in 311 days, with 500 dApps built on top of their ecosystem. And the craziest of them all is Polygon. Polygon went from 0.6 of a penny to $2.60 in 416 days. Now, Polygon claims that they have 37,000 dApps built on top of their blockchain. I find that extremely hard to believe, but who knows what the heck they're counting as a dApp. It doesn't matter what layer 1 blockchain you look at, they all function the same way. The price of Ethereum is directly related to the demand for Ethereum. So let's take a look at the Ethereum chart. If we take a look at the summer low of Ethereum, Ethereum only came down to $17,050 during the most bearish stretch during summer. Then we fast forward 180 days, Ethereum runs up to $4,995 and then comes crashing all the way down to $875. What was the difference? Well, number one was the burn. But isn't the burn supposed to help price, not hurt price? Yeah, so add the burn in there and Ethereum still came down to $875. Well, if we take a look at summer of 2021, Ethereum was the talk of the town. Not just Ethereum, but NFTs. From July 1st to August 1st of 2021, OpenSea's volume went through the roof. They increased sales by 76,240%. The non-fungible token marketplace processed 1.18 million transactions worth over $1.06 billion. And they did that in a 30-day period. That's pretty crazy, right? No matter how bearish the market got, the price of Ethereum was not dropping below $17.50. That's exactly what started the next massive rally. From June 1st of 2021 to January 1st of 2022, OpenSea and NFTs became the lifeline of Ethereum. And in January of 2021, OpenSea broke its all-time record sales that topped $5 billion in 1 month. Over the course of a 6-month period, OpenSea sold roughly $14 billion worth of Ethereum NFTs. You see, every single ETH NFT that was sold on OpenSea was sold in Ethereum. But what changed over the last 8 months, and why did Ethereum not stop at $17.50 like it did last summer? That's simple. The demand for Ethereum is dying. People got sick of paying outrageous gas fees to trade Ethereum NFTs, so OpenSea had no choice but to integrate into Solana and the Polygon ecosystem. There is zero reason why anybody would build an NFT collection on Ethereum versus Solana or Polygon, because the NFTs are pretty much all the same. They can all pretty much do the same thing. Why would anybody want their customers to be forced to pay a $50 ETH gas fee when they could use Solana or Polygon and pay 0.0001 in gas fees? They wouldn't. I mean, just look at the Ethereum merge. I mean, we hear all this news about the merge is this, the merge is that, the merge is the greatest thing since sliced bread, Ethereum's going to be the greatest blockchain in the world, but when is the last time you heard about a project saying that they were planning to build on top of Ethereum? Better yet, outside your rung of the muck Shat coin, when is the last time you heard any project talking about doing an ICO in Ethereum? This is why I say that the price of Ethereum will eventually bleed down. I mean, I would say it's going to go to zero, but somehow Luna still has a market cap of $1.6 billion, and the coin is legit a Ponzi scheme, meme coin, fraud, turd dipped in shart. A turd dipped in a shart. Sounds horrible. You see, this is why it's so important that everyone in the Kadena ecosystem understands the law of supply and demand. If we take a look at Kadena on TradingView, we can see that Kadena ran all the way up from 30 cents straight to $28 in a 90-day period. It was unlike anything I've ever witnessed, and it did all of that just off hopium. There was legit zero projects building on Kadena. There was zero demand for Kadena. and there was really no one using the blockchain at that time. This is why price fell all the way down from $28 all the way down to $1.35. That's exactly what we don't want to see happen next time. Next time we want to see Kadena run up to $300 and only crash down to $200, not run up to $300 and then crash all the way back down to $10 because there is no demand for Kadena. The Kadena ecosystem is on the verge of going parabolic, and there is nothing that will add more value to the Kadena bags than if everyone in the Kadena ecosystem uses KDA for everything. Anytime a new project launches, you want to make sure that you are buying into that IDO with KDA, not USDC, not ETH, not Bitcoin, but Kadena. That will make a massive impact on the price of Kadena, and it also helps bring up the volume in Kadena. The big whales love volume. The more volume Kadena has, the more likely it is that traders will start setting up bots to trade it, and that's exactly what we want. But nothing will add more value to Kadena than somebody building the Open Sea of Kadena and making KDA the main currency that all NFTs are traded in. This is by far the most important aspect. Let me explain. If we take a look at the top 10 Ethereum NFT collections, we can see that the total value of Ethereum is 3,190,000. That's 2.6% of the entire circulating supply of Ethereum is tied up in NFTs. And that's just in the top 10 projects. Now imagine if all of those NFTs were sold in USDC and not Ethereum. What do you think that would do to the price of Ethereum? Pretty crazy to think about, right? Let's take a look at Bored Ape Yacht Club land sale. In 24 hours, the Bored Ape team raised $320 million in Ethereum. Today, the Kadena market cap is only $300 million. So, one NFT land sale had a higher market cap worth of land JPEG NFTs than the world's most advanced blockchain. That's freaking wild if you ask me. This is why it's super important that everybody in the community understands how valuable it will be to Kadena if everybody used Kadena to buy, sell, and trade NFTs. The worst thing we could see in an NFT marketplace is them starting to use something like USDC. You see, on OpenSea that wasn't possible. When you buy, sell, or trade Ethereum NFTs, you have to pay Ethereum gas fees. Even if you wanted to use USDC, you would still need to use the ERC20 version, and you'd still have to be paying those outrageous Ethereum gas fees. So that was never an option. But on Kadena, we have what are called crypto gas stations. Every project that builds on Kadena has their own gas station. That means that the teams who run the project have the ability to prepay the gas for themselves so that their customers can use any currency they want as payment. It's actually super badass design, and there is nothing wrong with the design whatsoever. So many people in my last video were asking why Kadena doesn't change that, but they don't really understand what they were actually saying. The best way to think about it is like this. If you opened your own gas station in the United States, does the government have the ability to tell you what form of currency you can accept? Nope. Could you accept Bitcoin if you wanted? Yep. You see, when you own your own real-world gas station, anytime you sell something, the government doesn't care. All they care about is if they are getting their taxes. So think of Kadena like the same way. You run your own gas station on Kadena, as long as you're paying the Kadena gas fees, that's all that matters. You can accept Turkish lira if you wanted, but you still have to pay your sales taxes in dollars. Kadena is the same way. Gas stations on Kadena will be used for so much more than just minting NFTs. Medical facilities will prepay gas stations so employees who need to pull medical records from their blockchain can do so without needing to pay gas fees themselves. So changing the way gas stations work would defeat the whole purpose of Kadena. What makes Kadena so great is the fact that it's open source and permissionless. No one can tell you what you can or can't build on their blockchain. All gas stations is code. It's super important that people realize that. The best thing we can do as a community in Kadena is use Kadena for everything and make sure that we are showing the most love to the NFT marketplaces that list Kadena NFTs for sale with KDA. Unlike Ethereum, gas fees are only 0.0001. That means that for transactions on the Kadena blockchain to create as much demand for KDA as one Bored Ape Yacht Club land sale, the Kadena blockchain would need to process 3.2 trillion transactions. To help put that into context, yesterday the Kadena blockchain processed 975,000 transactions. So if we divide 3.2 trillion by 975,000, it would take the Kadena blockchain 328 million days to process that many transactions. But when the Kadena blockchain starts processing 100,000 TPS, that's a completely different story. Now, what's really crazy to think about is when the Kadena blockchain does reach 100,000 TPS, every 365 days, the Kadena blockchain will use $320 million worth of KDA in gas fees. And that's at the value of gas stays at its current rate. So let's say people are still paying 0.0001 KDA for every transaction. If the value of Kadena is at $1,000 and they never change the gas requirements, gas would be 10 cents. Well, let's just say that every single day, the Ethereum blockchain would produce as much demand for KDA as the Bored Ape Yacht Club Land Sale Star Atlas and the next 10 largest NFT collections combined. Even if gas fees were only 0.000001 KDA, which is equal to 1/100th of a penny, when the Kadena blockchain hits scale and the blockchain is processing 100,000 to 480,000 TPS, the demand that's going to be caused for Kadena will legit blow your mind. In less than 90 days, I hope to have a stock-to-flow model completed for Kadena, just like Plan B did for Bitcoin, but I just need a little bit more time to collect data. This was the message I was trying to get across in my last video. I apologize to Kadena Mining Club, Kadena Hashing, and Core Blockchain. I did not intend for my video to come off the way it did. One product raising funds in USDC or Ethereum or whatever wouldn't make the smallest impact on price. I did not know that you guys did not do your mint already or you're still in the process of minting. That was super rude of me and I deeply apologize that I made you guys look bad. That was not my intention. Every one of these Kadena mining NFT projects is going to add so much value to the Kadena ecosystem, more value than I could ever add. So make sure you guys come over to the live stream next week. We're going to be doing a live mint for the Core Blockchain NFTs. Make sure you guys swing over to Kadena Hashing and show them some love. And I just dropped a great video on Kadena Mining Club. If you guys hadn't had a chance to check it out, you should. Those NFTs are off the hook. I also plan to be doing a $500 Core Blockchain NFT giveaway. Seeing y'all make those polls goes such a long way in showing the community that you're really here for them and that you want to do what's best for the Kadena ecosystem. I really can't thank y'all enough. Good vibes always, crypto fam, and I'll catch you guys in the next video.